Same income, same down payment. I ran one buyer's mortgage numbers in BC, then again in Alberta. The monthly payments came out almost identical. But the total cost of living was about $100,000 different over 5 years. And he's one of more than 30,000 people who left BC for Alberta last year. And the reason the math worked out this way is not what you think. Here's what almost everyone assumes when someone tells them BC is expensive and Alberta is cheap. That the gap is because of the house price. Sticker price minus sticker price. And there's your answer. But that's actually not where most of this number comes from. And even if you're not planning on moving anywhere, which if you're anything like most people in BC and who are watching this, you're not, there's a second part of the story which matters to you more than the moving part does. Before we start, I'm Raghav Manchanda, a mortgage broker licensed in both Alberta and BC, and that means I can run these comparisons on the same call for the same person using the same qualifying numbers, which is exactly what I did for my colleague in this story. So here's exactly how the math played out, what it means if you're actually considering the same move, and what it means if you're not. Let's start with who we're talking about in this video. The guy's in trade and construction, the partner works fully remote, no office to show up to, no location tied to her job. Together, they qualified for a maximum mortgage of about $600,000. And in the Lower Mainland, $600,000 gets you a condo. No yard, no suite, no land under your feet. Now, he was getting real job offers in Alberta's construction sector. So they called me and I ran the numbers on both sides. Here's British Columbia. Purchase price of $600,000. Minimum down payment on a home at that range isn't a flat 5%, unlike most people think. It's 5% of the first $500,000, 10% on whatever's extra. So the real down payment in this scenario is $35,000, not $30,000. Now that leaves a mortgage of $565,000 at the CMHC insurance premium, $22,600, and the actual insured mortgage is $587,600. At today's rate, there's a payment of about $3,135 a month. Add strata fees of around $500 and property tax of around $150. Total monthly housing cost just under $3,800. What does that buy? A condo or an apartment. What does that buy? A condominium. Now Alberta, purchase price roughly $580,000. Minimum down payment, same rule, $35,000. Mortgage of $547,000, CMHC premium of $21,880, insured mortgage $568,880 including the premium, and the monthly payment about $3,035. No strata, it's a detached home. Property tax of let's say $200 a month. And then the number that actually changes everything. $1,100 a month in suite income, because this home has a legal suite and the BC condo never could. So the net monthly housing cost in Alberta, about $2,135. Now look at what just happened. The mortgage payment itself, almost identical, about $100 apart. If you stop listening after the mortgage numbers, you'd walk away thinking the gap between these two provinces is basically nothing. The real gap is everywhere else. It's the $500 in strata fees that don't exist in a detached home. And it's that $1,100 in suite income that a condo can never generate, no matter how you finance it. Add it up and you get a difference of about $1,650 a month, just under $20,000 a year. Over 5 years, just under $100,000. Same buyer, same income, similar down payment, similar monthly expenses. A condo in one province, a house with a yard and a suite in the other, for a mortgage payment that's basically the same. But here's the part of this comparison that almost nobody thinks to check. And it isn't about money at all. It's about whether the bank says yes in the first place. Every mortgage in Canada gets stress tested at your contract rate plus 2%. No matter what rate you actually lock in, a smaller mortgage isn't just cheaper every month, it's mathematically easier to qualify for under that test. Which means for some buyers, this was never really which one is more affordable, it was which one the bank would actually approve. I've had files where the BC purchase would have been declined outright and the Alberta purchase cleared without a second look on the exact same income. Now, nobody puts that part in the headline. It's usually the part that decides everything because qualification is people's future. Now, all of that is for someone actually making the move. And I'm going to guess most of you watching this video aren't packing a truck for Alberta anytime soon. That's exactly why what I'm about to tell you matters more to you than everything I've said before. So if you already own a home in BC, you're sitting on something my colleague did not have yet, equity. And the mistake I see people make constantly is treating this as a binary choice. Stay in BC and accept the numbers you have, or move to Alberta and get the numbers I just showed you. But this is not binary. Here's the version nobody talks to you about. You take equity out of your BC home, whether it's a refinance, HELOC, whatever structure fits your situation, and you use it as the down payment on a second property in Alberta. One with the same kind of income potential as that suite I just described. You keep the BC home, which is the asset that is scarce and still appreciating, and you collect the Alberta cash flow on top of it. You get the BC life you've already built, and you get the Alberta economics, which make more sense, on a property that's working for you instead of just sitting there. This isn't the right move for everyone, let me be very clear on that. It depends entirely on how much equity you're sitting on and what specific numbers look like. But it's the option that almost never comes up, because most of what gets said about BC versus Alberta online is written by someone who can only see one side of that border. I can run both on the same call with the real numbers for so many different scenarios and can't just guess it. So here's the real breakdown. A $600,000 condo versus a $580,000 house with a yard and a suite, a mortgage payment that's nearly identical, and a total cost of living that's almost $100,000 apart over 5 years. Mostly because of the cost nobody puts in the headline. A qualification question that matters as much as an affordability one, and an option that lets you access Alberta numbers without leaving BC at all. Whichever one of those is your actual situation, whether you're moving, staying, or just curious what your own numbers look like, that's worth an actual conversation, not a guess based on a benchmark price you saw in the news article. Now, I am offering everyone a free complimentary review and a strategy session. I'm giving everyone access to my calendar with a 20-minute free review. And more than that, the bigger question is, where everyone's uncertain about where you can make money, where you can invest, what to do, there are options outside of your home which are gold mines. We should look into not just Alberta but other provinces where you can actually get properties which give you cash flow, which give you appreciation, which give you peace of mind, because your financial future depends on the right mortgage moves. So make sure you keep on subscribing, and if this video helped you, make sure you leave a comment and share what you think. My name is Raghav and I'll see you on the next one.